If the US Bank Smartly card were a person, it would be the guy who buys a Ferrari but has to push it everywhere because he spent his gas money on the vanity plate. It's a card designed by actuaries who view fun as a taxable liability and marketed to people who think liquidity is something you pour into a crystal tumbler. To unlock that headline 4% cash back, US Bank required you to park $100,000 in their ecosystem. In a world where high yield savings, they're asking you to keep six figures in a glorified digital coffee can just to have an extra 2% on your groceries. They're lighting thousands of dollars on fire for you from interest for you to earn a nickel back on your latte. It's not a rewards program, it's a cognitive decline test that US Bank is betting you'll fail. When the card launched, it was the ultimate catch all. Then US Bank saw the data and realized people were actually using it for expensive things. And acting like the raccoon on meth they went full chaos mode to stop the bleeding. They slapped a $10,000 a month cap on the boosted rewards. If you're a high spender, the exact type of person with $100,000 sitting around, US Bank essentially said, thanks for the interest free loan. They decided that all purchases actually meant whatever we feel like taxes, tuition, insurance. The only thing worth putting on the 4% card are now excluded. It's a 4% card for everything except the things you actually need 4% on. They moved from a 90-day average balance to a 30-day window. They want that $100,000 held hostage now. If you dip below that line for a week because of a life emergency, they'll strip your rewards faster than a repo man in a dark alley. And here's the punchline. It is February of 2026. US Bank transfer partners are currently about as real as a unicorn or a US Bank customer service rep who understands their own website. The Smartly card isn't a financial tool. It's a loyalty test for people who have more money than sense.